Hello traders, a very warm welcome and thank you for joining me. This is Mike Hamilton for Trade the Easy Way, and I'm going to look at the euro with you, the euro US dollar, because I think this has got a key indication of potential appetite for risk in this market. So we're heading into non-farm payroll tomorrow, and on the whole the data this week has not been great. So what I'm looking for is I want to see if the dollar can show some weakness, which will give the markets some breathing space. I think the weaker the dollar, the more likely the American indices are to push up, and the more likely the pound and the euro are likely to see some buyers coming in. So here we are with the euro. I've just taken the fibs off because I think the chart pattern is clearer than the fibs at the moment. You can see, let me just tidy this up, I just realised that trend line is not very accurate. You can see this Euro US dollar is in an apex and it has been range bound for a lot of the year. Once we pushed back down here, once we sold off down here in March and April, we started to form a base here and broke out, came back to retest this area, and we spent pretty much the bulk of the last 6 months just testing this area. So if I actually draw that in, so on the late January lows, we've just been sort of gyrating sort of either side of that level, really. That's the mean, 110 is the average for the euro this year, and we've been just flapping around it. So if we can close around this, if we get a weak jobs number tomorrow, I think the dollar will see some weakness, as the likelihood of a September US rate rise will be minimized or lowered, certainly not written off, but lowered. And I think we will see this euro close above 110 and potentially start to make a recovery and head up to the 350 level. So I'm pausing, I'm just running through some scenarios in my head just as I'm speaking. Sorry about that. So I think if we see that, if we get a close into the weekend above 110, I think that opens the gates for some higher moves in the pound, higher moves in the euro, and the US and European indices can potentially see a little bit of push into options expiry in the next week. Let's just switch on to commodities. This is oil. Tried buying a couple of dips in oil and made small losses, so I just backed off. If I'm bottom fishing, if I'm looking for a reversal, then I would just risk very, very small sums of money, leave them on the table, and then if the market lets me keep the money and builds on it, then I'll add to it. Otherwise, happy just to take some small stop outs. I don't mind small stop outs. The most important thing is just you've got to let your runners run, otherwise you will not build your account up. So here we are with oil. So 45.30 is critical. We had a lovely reversal pattern here, gapped up, hesitated, and then really started to push up. And then we just had this distribution pattern. Couldn't break through this level here. Spent a lot of time swooning around, and of course the highs sold. Typical of a bearish consolidation, the highs sell, and then once we closed under 60, we ended up in this channel. On every test of the high of the channel, drag that down until we get down to 45 here. So obviously if we close above 45.30, that line in the sand, that could see at least a retest of these resistance areas up here, 50, 52, that sort of area. At the moment you can see all the moving averages are opened up. That's a 20, the 50, 100 and 200, and there is still no sign of any reversal here. This could still go lower. So if we break the low, we could even come down to 40, this level down here. So the fact I'm getting stopped out when I'm trying to trade a reversal suggests to me that at the moment the dollar is way too strong. The oil supply mechanism is strong and the demand is too weak, and there is not an appetite to buy the oil. So the volumes are low, any little high just gets sold into. So stay away from oil, and at least let's see where we are at the weekend, because there is no buy signal in that at all. And just because it's a hammer-like bar doesn't mean to say that is going to push up. Be very careful. The gold, I have taken a couple of small moves out of the gold this week, but again it's a looking like a bearish consolidation. So I think here's the 20 EMA. What I would look to do is I would look for that to crash into the 20 EMA, at which point I think that will trigger the next leg down. This is what's happened before. We have sold, pushed into moving average, sold, pushed into resistance level, sold, and so on. I think you get the picture. So we are still winding down. And yeah, if we start cracking under 1075, then that's toast. Why have I been buying some longs here? Just in case it has a very nice move. If there's this much selling going on, at some stage you might get a short covering bounce. So I just nibbled on the lows here to see if I can get a nice severe push. I'm just not getting it. So it has closed higher there. So I mean, there is some buying pressure in there, but it's limited. So be careful. Divergences, yeah. We've got the gold coming lower and the RSI making higher lows. We've got the MACD potentially bottoming out there. We're certainly oversold, but certainly very low, I should say. No such thing as oversold. So be careful if you are trading that. I think this is one of the most interesting charts out there at the moment. This is the Euro CAD. Now the reason why I did actually short this today, but I think the main problem was I got my timing wrong. I should have waited until the US market was open and in full flow. I shorted it in the Euro session, started to move my stop up too tight to avoid the volatility of the Bank of England, and yeah, I mismanaged it basically. Hands up, I mismanaged it. It happens, but it's not too late to get involved with this. Then we've got CAD data tomorrow, and the reason why I like this chart so much is because this line here, if I just step back, you can see this green line here at 144 is a huge fire line, and we have this channel at which we have tested the top and have started to sell. We've got a couple of bars there. In fact, Monday's bar held up into this area here. Get my pen. So we had a decent push up here, close below, so a sell signal here, and then on the early part of the week, all we did is sit in this sell signal, and now we are closing lower. So if this is a bullish consolidation, we'll come down here, test it, and then start pushing up. In the meantime, I'm just looking at shorting this to see if I can get short around about the 350 mark, ideally higher, and then see if we can start to lose our footing and start coming down, at least testing on 3950. But I like this because if in the Eurozone they're printing lots of money. Okay, oil is very weak and hitting the Canadian economy, hitting the CAD. So you've got two weak currencies at the moment fighting it out. But my money is on, because the printing presses are going to continue for at least 12 months in Europe, I think I'm looking for opportunities to sell this one. Because if we come through that midline, I think that could drop hard. Obviously, a bounce in oil would, if we get that close above 50, 51, that oil will have a major impact on this one, and could definitely signal, at the very least, decent pullback to some of these support levels. Okay, let's look at some stocks. Had the pound seen a lot more strength, I would have looked, and the Bank of England being more hawkish, I would have looked to short this. I am still looking at shorting this. I'm interested in the housing market because if we are heading for rate rise in the US and the UK, I think the house builders are going to be hit as mortgages start to increase, and I want to see if that can drop out of that picture. So I'm monitoring GFRD and Persimmon and the other house builders, and of course all the US house builders very closely. If oil is going to pick up, this is RIG. Talked about this in the, I posted a comment in the room very briefly, and this has had a good day. So nice channel down, and nice sort of funnel pattern there, and we've come off and closed above this level here. So I think it's worth buying a pullback on this one. That's two nice days up here. Be very patient for a pullback. You can see the divergence here on the RSI, a good reversal pattern, and the MACD is beginning to look as if that has got divergence. So RIG, the RIG VLO, there's just quite a lot of blue on the oil stocks overall. Let me pick one or two. This one here is a good reversal pattern. This is my favourite reversal pattern. You have a downtrend, clear downtrend. This is sort of a final sort of impulsive wave. Then you get a new low and then a close above with divergence on the RSI. I think at the very least, if you bid on a dip and then took half off or some off at that resistance level, stop to break even, and then otherwise just see if it can push back. I mean, Murphy Oil has in the past been a very good trending stock. Obviously, when oil is in better shape, this has been a very good stock. When oil is doing well, this one performs well. There's your sell signal, and down she comes in waves. 1, 2, 3, 4, 5. Correction wave, and then we start a decent descent. But to me, That's a good probability trade that we can get something out of stock. There's plenty of stocks like that. Let's see if I can find a stronger one, because that has been beaten up. As well, obviously, a lot of oil stocks have been beaten up. Let me see if I can find a better one. This stock had relative strength. This is PTEN. So if you've got a very weak market and a stock that's held up a lot better than others, then if the market is going to recover, this is a higher probability. So PTEN found its base there at 1640, 1630 by the look of it. Nice move up today. Close above the 20, hit the 50. So if we can now pull back to this support level here at 1730, I think that can do well. But bear in mind the overall trend. Oh, it's a bit of a head and shoulders pattern. We've got a shoulder, a head, and a shoulder. This is the neckline. We're closed above the neckline, so that potentially opens the door for a push back to about 2040, possibly higher. But just be careful. I mean, don't start committing too much to the oil market, because the oil is still on a clear downtrend. There is no reversal signal. There's no buy signal in oil itself. But I think some of these are good, solid stocks. They've been beaten up under the pressure of a weak oil, and I have seen some buyers. That's Schlumberger, SLB. They'll leave it. And so if you're not a stock trader and you're probably getting a little bored with this ramble, but I am trying to be as thorough as I can. So if you do get into any of these stocks, Rolls-Royce, I'm waiting for that to dip to 777, so I'm happy to let that one drop further. And what else was I interested in? Nope. Nope, Alibaba, Chinese stock, don't want to get involved with that, but I'm looking anyway. Yeah, let me just... Right, TJX, sell signal. It's holding. We've got so much resistance under there. I'm just looking to see if this one can come underneath that. And we are holding that trend line. I would leave this until after non-farm payroll, or look at it after the data's out and the market's open. But that is struggling. And we have got a history of selling here, as we talked about in the past. So keep an eye out on it. Let's see where we are. Glaxo is just on a storm. Frustrating. Frustrating if you didn't get this pullback. 1365. That's doing well. Macy's. Yeah, I've been short this for a few days, and that is drifting lower. Interestingly, we're just coming back to this big buyer's bar, so I suspect there's going to be some, or I've already seen some short covering down here as traders are getting out on that support. All right, so I'll update you once we get non-farm payroll on our way. Thanks for listening and trade carefully.